Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good As Gold. Over the past week, gold prices saw a slight uptick, followed by a significant pullback, basically just trading water. The U.S. economic data for May was a mixed bag, and recent comments from Fed officials leaned towards a hawkish side, leaving everyone guessing where gold will go next. With the U.S. and French elections looming, plus heightened Middle East conflicts, folks are flocking to gold as a safe haven bet. The big event to watch this week is Friday's US Core PCE data. If inflation seems under control, it might just cause the Fed to reconsider its rate cut timing, potentially providing a lift to gold. Looking at the gold against US dollar daily chart, over the past week, it's clear that gold hasn't really moved much, hanging between $22.85 and $24.30 for more than 2 months. Things looked up last Thursday as gold pushed past $23.30 and even touched $23.60, rallying by 1.4%, its biggest single-day gain since mid of May. But Friday was a different story. The price gave back all its gains from Thursday and dropped below the 50-day moving average. As we head into this week, gold is still playing around $23.30, leaning slightly towards the bearish side. If it continues to slide, we might see strong support around the $22.85 mark, which has been a key bottom since mid of April, while on the flip side, if bulls regain control, keep an eye on the 50-day moving average and $23.60 as potential upside targets. So the mixed signals from both bulls and bears are keeping gold in check. On one hand, May's disappointing retail sales and the downward revisions to industrial production in April and March offered some upward momentum for gold, while on the other hand, last Friday's stellar June PMI readings highlighted the resilience of the U.S. economy. A stronger U.S. dollar has obviously been a drag on gold prices. The rosy economic outlook in the U.S. is backing up the Fed's cautious approach to rate cuts. The recent hawkish remarks from Fed officials suggest they might hold off on rate cuts for a while, and the staunchly hawkish Governor Bowman also threw in her 2 cents, saying that she doesn't see any rate cuts happening this year. This conservative stance is putting a lid on any potential upside for gold prices. Well, despite these challenges for gold bulls, there are still factors supporting the price. Uncertainties around the upcoming U.S. presidential debate and French elections, along with geopolitical tensions, are boosting demand for safe haven assets like gold, thereby bolstering its prices. While in the medium to long run, global central banks might continue to buy more gold next year, the latest World Gold Council survey suggests a whopping 80% of the surveyed central bank plan to increase their gold holdings in the next 12 months, a record high since 2019. Meanwhile, currently, SOFR indicates a potential 90 basis point cuts in rates by the end of 2025, so this strong central bank purchases along with anticipated rate cuts are both supportive factors for gold. So in summary, gold is stuck in a sideways trend with robust U.S. economic data and Fed officials' hawkish comments caping any upward movement, while geopolitical tensions, central bank stocking up on gold, and rate cut expectations are all part of the bullish case. Personally, I think gold will likely keep bouncing around until we get clearer signals from PBOC on its gold purchasing plans and more definitive U.S. economic data. And coming up later this week, all eyes will be on Friday's US PCE data release, a potential market mover. Market watchers are expecting a modest 0.1% month-on-month increase and a 2.6% year-on-year uptick in May's core PCE, both lower than the previous values. A flat or negative month-on-month reading could increase expectations for Fed rate cuts in September, possibly signaling 2 rate cuts this year. This would be a positive scenario for gold, obviously, while conversely, any surprise uptick could spark a rebound in U.S. Treasury yields, pushing gold prices lower. So that's pretty much for this week. If you have any thoughts on US PCE or recent gold trading, feel free to leave a comment below and let's discuss. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!